People who invest money and watch the markets should be careful. Stephanie Ruhle, who used to work on Wall Street and now hosts a show on MSNBC, is saying some things that people should think about. She is talking about what President Trump has been doing in Venezuela. Stephanie Ruhle thinks that the things President Trump is doing in Venezuela could cause problems with the economy all around the world. Some people think they can make money from what's happening in Venezuela, but Stephanie Ruhle says this could actually cause a lot of trouble for the whole world. The economic problems that Venezuela is having could get much worse because of what President Trump's doing. This could lead to problems that we have never seen before, and it could affect the whole world, not just Venezuela. On the show Morning Joe on MSNBC, Stephanie Ruhle talked to Jonathan Lemire. Stephanie Ruhle hosts the 11th Hour. She knows a lot about money and finance around the world. So she said some things that might worry people about what's going to happen with global markets. Stephanie Ruhle thinks this is not a problem for one area. Global markets could really change because of what's happening. This could change how countries do business with each other. Welcome to the jungle, Ruhle said. She used this saying to explain what she thinks is a crazy world economy right now. The world economy is getting harder to predict. Ruhle is giving this warning at a time when Wall Street people and big American oil companies are looking at Venezuela to see if they can do business there. Venezuela has a lot of oil. It is one of the countries with the oil in the world. Ruhle's central argument challenges the prevailing optimism among some financial institutions. While acknowledging that there could indeed be significant opportunities emerging from the situation in Venezuela, she cautioned that market participants are making a critical error by focusing exclusively on immediate gains. When you think about investing, the banking and financial world sees some possibilities in Venezuela. The banking and financial world thinks that Venezuela can have some opportunities if everything goes the way the administration wants it to. This is a big if. Ruhle said this. You can tell she really doubts that things will work out well. The former banker is worried about a lot of things that can happen because of what's going on in Venezuela. She thinks that what is happening now can cause problems in the entire world economy. This can make a lot of problems that the markets do not know how to deal with. The former banker thinks that this is an issue that can affect the global economic system in many ways. Venezuela is the start, the former banker says, and the problems can spread to many other places. What really stands out in Ruhle's analysis is what she found out about reactions in China. Ruhle looked at what people were saying on social media over the weekend. She says people are talking a lot about one question on these Chinese social media platforms. This question is now one of the things people are discussing in China. What is the big thing that people are talking about on social media right now? Ruhle asked. If the United States can do something like this and they do not care about rules, then China can do the same thing. Is China going to do something with Taiwan? China and Taiwan are the things that people worried about now. China and Taiwan are a deal. The situation with Venezuela and what China might do about Taiwan is a deal. It means that people think the world is a dangerous place now. Taiwan is a country that can govern itself. It is a democracy. China says that Taiwan belongs to them. For a time, people have been worried about what might happen with Taiwan because it is a very sensitive issue. If China were to attack Taiwan, it would be very bad for the world. This is because Taiwan is very important for making semiconductors and for trade between countries. Taiwan and its situation with China is something that people are watching closely. The connection between Venezuela and Taiwan is making people think that China might do something about Taiwan, which would be a problem. The Taiwan Strait is an important route for ships. Taiwan Semiconductor Manufacturing Company makes most of the world's microchips. These microchips are necessary for things like smartphones and military systems. If there is a problem in the Taiwan Strait, it will have an impact on the economy. This would be much worse than anything that happens in Venezuela. The Taiwan Semiconductor Manufacturing Company and the Taiwan Strait are very important to the world. Ruhle is worried about something. She thinks that countries are starting to look at law and norms in a totally different way. For a time, the way the world economy works has been based on some basic ideas. These ideas are about each country being in charge of itself, respecting the borders of countries, and following the rules that govern how countries interact with each other. The international law and norms are really important to Ruhle. She thinks that this change is a fundamental shift in how nations might view international law and norms. The people in charge have just done something different from what they usually do, Ruhle said. She thinks this could make other big countries want to do what they want to do, like take land or get more power without worrying about the things that normally stop them from fighting big wars. The administration is changing the way things are done, and this could have effects, Ruhle noted, because the administration is not following the old rules. People who study how countries interact with each other have said for a time that the way the world works after World War II, even though it is not perfect, has helped the world economy grow a lot and has kept things pretty stable. Now people are worried that if big countries start thinking that the rules do not matter anymore, it could cause a lot of problems. International relations experts are concerned that this could make people pull their money out of markets, which would make the markets very unpredictable, and it could also stop countries from working on economic issues. The international relations experts think that if countries do not follow the rules, it will be bad for the world economy and it will be hard to keep things stable. Ruhle also talked about the World Economic Forum that is going to happen in Davos, Switzerland in 2 weeks. The World Economic Forum is important for the economy of the world. Some people in the United States might think the World Economic Forum in Davos is for rich and powerful people, but Ruhle said it really matters for keeping the global economy stable. The World Economic Forum is a deal because it helps with global economic stability. Davos is really about getting leaders and business leaders and world leaders together to talk about how we can make the world a better place. The people in charge just did something, so it is hard to say what these talks are going to be like. Davos is where world leaders go to discuss things, and now we have to wait and see what happens with these conversations at Davos. The annual Davos meeting brings together heads of state, central bankers, corporate CEOs, and other influential figures to discuss global economic challenges and opportunities. The gathering serves as an important forum for relationship building and establishing shared understandings about economic policy and international cooperation. This year's forum was already expected to address challenges including inflation concerns, technological disruption, climate change economics, and ongoing geopolitical tensions. The Venezuela situation adds another layer of complexity and uncertainty to these discussions. In the immediate aftermath of the Venezuela developments, markets have shown mixed reactions. Energy sector stocks, particularly those of companies with potential interests in Venezuelan oil production, have seen some gains based on speculation about future opportunities. However, Ruhle's warning suggests that investors should be looking at a broader picture. So many shoes are about to drop, she cautioned, using the expression to suggest that multiple consequences and complications are yet to emerge. Financial advisors and portfolio managers are now grappling with how to position their clients' investments in this new environment. Traditional safe haven assets like gold and U.S. Treasury bonds have seen increased interest from investors seeking to hedge against geopolitical uncertainty. Venezuela possesses the world's largest proven oil reserves, estimated at over 300 billion barrels. However, years of political instability, economic mismanagement, and international sanctions have severely diminished the country's oil production capacity. At its peak, Venezuela produced over 3 million barrels per day. In recent years, production has fallen to a fraction of that level. American oil companies are naturally interested in the possibility of accessing these reserves and helping to restore production capacity. The potential revenue from Venezuelan oil could be substantial, and companies with experience in heavy crude processing are particularly well-positioned to benefit. However, Ruhle's analysis suggests that companies focusing solely on these opportunities may be overlooking significant risks. Political instability, infrastructure challenges, and the possibility of international backlash could all complicate efforts to develop Venezuelan oil resources. Furthermore, if the situation triggers broader geopolitical instability, particularly involving major powers like China, the resulting market disruption could far outweigh any gains from Venezuelan oil development. The connection between respect for international law and economic stability is well established in academic and policy circles. Multinational corporations invest billions of dollars across borders based on the assumption that certain rules and norms will be respected. International trade flows according to established agreements and dispute resolution mechanisms. When these foundations are questioned, the cost of doing business internationally increases. Companies must spend more on risk assessment, insurance, and contingency planning. Capital becomes more expensive as lenders demand higher returns to compensate for increased uncertainty. Professor Michael Chen of the International Economics Institute at Harvard noted, "Markets thrive on predictability. When the rules of the game appear to change, capital tends to move to safer havens, investment decisions are delayed, and economic growth suffers." The concern is not just about Venezuela itself, but about what precedents are being set for international behavior. Ruhle's warning about shoes dropping reflects a concern about cascade effects in the global system. In complex systems, changes in one area can trigger unexpected consequences elsewhere. The financial crisis of 2008 demonstrated how problems in one sector, U.S. housing, could rapidly spread throughout the entire global financial system. The concern now is that instability in international relations could trigger similar cascades. If China were to take aggressive action regarding Taiwan, for instance, the consequences would extend far beyond the direct parties involved. Japan, South Korea, and other Asian economies would be affected. Global supply chains would be disrupted. International shipping routes could become contested. The U.S. and its allies would face difficult decisions about how to respond. Each of these consequences would have economic implications, potentially triggering market sell-offs, currency instability, and recession in multiple countries simultaneously. Major corporations are now faced with difficult questions about how to assess and manage these emerging risks. Chief financial officers and risk management teams must consider scenarios that seemed remote just weeks ago. Some companies are reportedly reviewing their international expansion plans, particularly in regions that could be affected by geopolitical instability. Others are stress testing their supply chains to identify vulnerabilities. Insurance companies are reassessing their exposure to political risk. These corporate responses, even if precautionary, can have real economic effects. When companies delay investments or reduce international exposure, it slows economic growth and can become self-fulfilling as reduced activity leads to reduced opportunities. Currency markets are particularly sensitive to geopolitical uncertainty. The U.S. dollar has traditionally served as the world's primary reserve currency, benefiting from its perception as a safe haven during times of crisis. However, some analysts worry that if international tensions escalate, this status could be challenged. China has been working for years to internationalize its currency, the yuan, and to create alternatives to dollar-dominated financial systems. Major geopolitical instability, particularly involving questions about international norms, could accelerate these efforts. If other countries begin to doubt the stability of the current international order, they might diversify their currency reserves away from dollars. Such a shift would have profound implications for U.S. economic policy and global financial markets. Emerging market economies are particularly vulnerable to increased global instability. These nations often depend on stable international conditions to attract foreign investment and maintain economic growth. When geopolitical tensions rise, capital tends to flow away from emerging markets back to perceived safe havens in developed economies. Several emerging market currencies have already experienced pressure in recent sessions as investors reassess risk. If this trend continues, it could trigger financial stress in countries with dollar-denominated debt, potentially leading to a broader emerging market crisis. The technology sector's response to these developments is particularly important given its outsized influence on modern economies. Many technology companies have extensive international operations and supply chains that could be disrupted by geopolitical instability. As Ruhle noted, the Taiwan question is especially critical because of the island's dominance in semiconductor manufacturing. Any disruption to Taiwanese chip production would have immediate effects on countless industries worldwide, from automotive to consumer electronics to defense systems. Technology company executives are likely to be particularly attentive during the upcoming Davos meetings, seeking clarity on how geopolitical developments might affect their operations and strategies. Historical analysis offers both reassurance and warning. The global economy has weathered numerous geopolitical crises in the past, from the Suez Crisis to the Gulf War to the annexation of Crimea. Markets have proven resilient, often recovering relatively quickly from geopolitical shocks. However, the current situation differs in important ways. The level of global economic integration is far greater than in previous eras. Supply chains are more complex and interdependent. Financial markets are more tightly connected. This interconnection creates efficiency in normal times but can transmit shocks more rapidly during crises. Additionally, the involvement of major powers increases the stakes considerably. Regional conflicts, while significant, typically have limited global impact. When relationships between major economic powers are affected, the consequences can be far more severe and long-lasting. Central banks around the world are monitoring these developments closely. The Federal Reserve, European Central Bank, and other major central banks have tools to respond to financial instability, but their effectiveness in the face of geopolitical crises is limited. If geopolitical tensions lead to reduced business confidence and investment, central banks might be pressured to cut interest rates or implement other accommodative policies. However, if instability also triggers inflation, for instance, through disruptions to oil supplies or other commodities, central banks would face difficult trade-offs. For investors trying to navigate this uncertain environment, Ruhle's warning suggests several areas to monitor closely. International reactions. How do other major powers, particularly China, respond to the Venezuela developments? Are there signs of increased assertiveness or testing of international boundaries? Davos outcomes. What messages emerge from the World Economic Forum? Do world leaders express confidence in international stability, or are there signs of fracturing in global cooperation? Market volatility. Increased volatility in equity, currency, and commodity markets could signal that investors are pricing in greater uncertainty. Corporate behavior. Are multinational corporations maintaining their international expansion plans, or are there signs of retrenchment? Capital flows. Where is money moving? Shifts towards safe haven assets suggest increased concern about stability. It's worth noting that even setting aside broader geopolitical concerns, the Venezuelan situation itself presents significant economic uncertainties. The country's infrastructure has deteriorated significantly, its institutions are weak, and rebuilding will require sustained effort and investment. Venezuela's economy has contracted dramatically in recent years, with hyperinflation devastating the population's purchasing power. Restoring economic functionality will be a massive undertaking, and the timeline for any return on investment is highly uncertain. Companies entering Venezuela will face challenges including currency instability, potential labor shortages due to emigration, degraded physical infrastructure, and uncertain property rights. These practical difficulties exist regardless of the broader geopolitical context. Stephanie Ruhle's warning represents a sobering assessment from someone with deep experience in international finance. Her message is clear: while there may be short-term opportunities emerging from the Venezuela situation, investors who focus solely on these immediate prospects may be missing much larger risks on the horizon. The question of whether other major powers will view recent developments as a precedent for their own actions remains open. The answer to that question could determine whether the global economy enters a period of increased instability and uncertainty. As world leaders prepare to gather in Davos, and as markets continue to digest the implications of recent events, Ruhle's warning serves as a reminder that in an interconnected global economy, developments in one region can have far-reaching and sometimes unexpected consequences elsewhere. For now, the advice from this Wall Street veteran is clear: look beyond the immediate opportunities and prepare for a more complex and challenging global economic environment. As she put it, so many shoes are about to drop, and investors would be wise to position themselves accordingly before they do.